Well, hello everyone, and welcome back to Man and Machine here with PeakBot and Harvested Financial. Gentlemen, how are we doing this morning? How's everybody's Monday so far?
Pretty good. Pretty good Monday morning. I think we're expecting some snow here up in the Northeast, so that always makes for a good work day, though.
Yeah, no distractions, nothing to see, no reason to leave the house. Just get it done. Mark, what's up, man?
It's back to work. It's a perfect day to get back. It's been 2.5 weeks of Fridays, so looking forward to getting into regular swing here. Although we were just saying we have Thursday off again, so not quite back to a normal week.
Can't find a normal week, but we'll get there soon enough. And by the way, I'm noticing as I say what's going on, guys, I screw you guys a little bit. I should go to one or the other because there's like who's going to speak. You guys have it figured out. Ben does normally pitch in. Mark has the patience. Anyway, notes live for myself. We've got a lot going on today's show. This morning, will, of course, take a quick look at PeakBot picks that rounded out on Friday to see if the team can go 9 for 9 again, and also if Thomas can get back above that 90% win rate. Of course, we have stocks in real life. We're going to be talking about Apple today, how we interact with the brand in real life and how we interact with it in the market. We'll be learning a little something. We're going to continue to talk about IV today, but based on different strategies and how to trade based on IV, and much more. Economic events, SPY analysis. So, guys, what do we say? Let's get into it.
Let's do it. I'll pop my screen up and we'll get over these PeakBot picks. If I remember correctly, my picks sucked last week, but we'll see.
You know what? We'll see. So I'm going to actually steal the screen here just for a second, and we're going to get into this. So PeakBot picks, we're in week 14. Okay. We can take a quick look at some stats in a minute if you want, but Ben has the leaderboard. He's won 6 weeklies. I'm in second with 4. Thomas is at the top of the leaderboard for win rate, really creeping. If he goes 3 for 3 this week, I think he'll see 90%. I'm in second, Ben's in third. So it's funny. Ben's has won the most weeks, has the least picks correct. Gotta love it. All right, so here's what we're working with this week. 2 bulls and a bear for everyone. So let's just see how it went. We'll fly right down the list here. Ben, let's get your screen up and we'll go from there. I have the check marks on there. They shouldn't be. So apologies. Maybe shouldn't have shown it. Dash, bullish, over 162.5 for $40 in premium.
Who is this for?
This is for Dillon here. This is for me. Okay, nicely done. Was this last week we did DoorDash? Stocks in real life?
Was this inspired by stocks in real life this
I
week?
think it was. It was certainly was on my radar. I was bullish on Meta for $226 in premium to stay above 575.
Very nice.
Nicely done. And I was bearish on Starbucks as I drink my Dunkin' coffee this morning. Now homebrewed because I don't want to be broke. $19 in premium earned, boring, trying to stay below 95 with a call spread.
All right, 3 for 3, Dillon.
Man, I love that.
Pretty good. Starbucks was also a stocks in real life a couple weeks ago.
And Meta's going to be next week's probably now. Because why not? Why wouldn't we?
That's little Peter Lynchism, right? You got to trade what you know.
Trade what you know. There's a lot of stocks on the list this week that we can cover on this show. All right, so 3 for 3 for Dillon. Pumped about it. Ben, let's see how you did. You were bullish on Tesla for $530 in premium. Put spread above 412.5.
So close. So close.
No.
Now, if I were actually trading this, I still would have won.
Because of the premium.
Because of premium. However, per the picks competition, this gets marked down as a loss.
Sure does. But yeah, you're right. I mean, you were close to the money. You earned so much in premium net gain. Okay. Sorry, Ben. Bullish on Netflix. You were trying to stay above $880 for $383 in premium. Boy. That was the close one? Was that close on Friday? Or I forget which one was really close.
No,
I think Uber, which is next.
Yeah, Uber. I think Uber's far out of the money. Uber
Oh,
was-
okay. So you were bearish on Uber. Yeah, that's what happened. I actually took this trade in real life. It met the core four. You were trying to stay under 63, which you did not. So 1 for 3 week for Ben.
That's because Goldman came out and named Uber like the stock of the year or something like that.
Best stock pick of the year. It's been bearish, as you can see, since October. And I've been playing it on trend spread bearish, and it's been nice. And then midweek it happened. I think the announcement came out of nowhere.
Yeah, freaking Goldman.
Yeah. So Ben, maybe you find a new approach next week. I don't know, man.
I did take a new approach this week.
Okay, so maybe you retrace. Who knows?
I think I still covered you guys premium, but I did take a more conservative approach.
Well, I'm pumped now because normally Thomas loves to go 3 for 3. If I can beat you in premium, I have a good shot. But let's see how Thomas did. He was bullish on NVDA for $85 in premium, trying to stay above 132.
Easy.
Boy, did he. Bullish on Costco, a former stocks in real life, trying to stay above 920 with a put spread for $129 in premium.
Squeaks that out.
Wait a minute. He didn't. Wow, what happened there?
Wait, he was bullish on it or bearish on it?
Bullish. I'll check it. I'll check my notes, but bullish on Costco. I'll make sure, but he was also bearish on PG 172.5, trying to stay below 172.5.
And he does.
I feel okay, he does. Let me just confirm here. So, which one was in question? Yeah, he was bullish on Costco. You know what, Ben? It was neutral. And he picked one. No, he didn't. You had the only neutral one last week. Anyway, yeah, he was bullish on Costco. So Thomas goes.
What was his strike?
920.
Oh, okay. All right. 2 for 3
sense.
for Thomas.
All right, so I win. So that's fun. We'll get that posted on socials. So 3 for 3, 2 for 3, 1 for 3. We'll get the updated stats. Thomas is really going to be flirting with that 90%. He was really close last week, so we'll see how this works for him. But all right, well, that's PeakBot picks. Stay tuned. For Friday, you'll see how we're doing on this week picks. We'll make next week's. But let's get into stocks in real life.
All right,
let's do it.
Let's hit it.
So, Apple. I'm not going to. I'm going to move myself down here because I don't want to talk too much. Stocks in real life. Apple. Ben, is Think Different their official slogan?
One of them. It was one of their big marketing campaigns. They also have a company slogan. It was make a dent in the world, do something that makes a dent, or something like that. Dent in the universe.
Just not good enough to put on.
Yeah, I don't remember it. But it was big and bold, and it's in school textbooks for marketing undergrads to study and learn from. But I used to be a big Apple fanboy. I would get the newest Macs, the newest iPhones, and then as I got into my professional career, I was always provided with a nice HP laptop. Mm-hmm. And I just have grown accustomed to HPs, and that's what I get now. So I no longer use the MacBooks. But where are you guys in terms of your Apple fandom?
Mark?
I would say I too ebbed and flowed. I went through maybe 3 MacBooks, but maybe it's because that's what I learned on. Maybe it's because of the professional world. But yeah, I'm a PC user for my computer. Although phone, you got to have that blue squiggle bubble. Yeah. I'm stuck with an iPhone.
Yeah, if you don't have the blue bubble, you could be labeled as a terrorist.
Yeah. Well, tough week for that. But, so I also share very similar as you guys. I had MacBooks through college. My cousin has worked for Apple at Apple headquarters outside of San Francisco for 15 years or something like that. Crazy in their camera photography department for the iPhone. So I always got the deals. I got the 50% off the computer. So I always did that. But same exact thing. I feel like unless you work for Apple, your professional computer and work and everything's going to be run on Windows. I think everybody has that experience. If I'm wrong, I don't care, but that's my opinion on it. Of course, I have an iPhone. I also feel the same way. If we're like talking into like partnerships or investors, and I see a green bubble come through in a group text, I'm texting Ben and I'm like, hey, we got to think.
I'm not too sure about these people.
They are failing on their first life decision, and that's not having an iPhone. Love Apple. It's not going anywhere. One of the biggest companies on the planet, constantly innovating. Let's take a look at the stock.
Real quick. You guys Apple Watch wearers?
No.
No.
Because I feel like I'm already so attached to this thing. If I had the phone, and I see it on Ben, and Ben's a workhorse, so it fits, but I feel like I would just be here all day. I would never have a break.
Oh, I am. It sucks, but I can't live without it now.
And pods. Ben, you're an AirPods guy. Yeah, you use them a lot.
This is the second generation. I refuse to get the new ones because I don't like the
nubs.
Like the little plug things that go in your ears. Yeah. I like the old fashioned, like just the let it sit in your ear.
So you got
the plugs are pretty good. I'm a big fan of the second version of them.
Oh, you're a big plugger, huh?
Yeah.
Okay. So
it's great technology. That's what you got to say about Apple, right? Like the stuff just works. And it's simple.
It absolutely works. And you guys with the buds, I think now we're learning about ear shape, because I think that's what it is. You're either, there's two types of people in this world. You either have the ears that fit those 3 or 4 sizes of those plugs they give you, like Mark, or you don't. Ben doesn't have the canal, I don't think, for those the new Apple.
But I've got an inferior ear canal.
I think so. But so let's look at the stock. I've certainly traded Apple a lot on our trend spread strategy, but let's look at the chart. I'd love to hear Mark's opinion on Apple from your days, your early days of trading and now.
Any good Apple stories, Mark?
Yeah, talk to us.
Like specific trading stories, I can't think of any off the top of my head, but it's an interesting example of a stock over the past 10 years that is really like maybe 15 years that is like settled down and matured. That 15 years ago, it was a wild new tech stock, and like every Apple day would be a big deal. And, they were putting out new products, and, implied volatility was commensurately high. And, generally the trading activity was much more speculative and opportunistic. So it was a great stock to trade, really volatile. But now that it's $1 trillion company, now that they're paying a dividend, now that they're like are they still technically the biggest in the S&P 500? They're up there, but they're a big mature conglomerate at this point, and it trades like that now. So I don't think it's kind of as fun as it might have used to be to trade, but from an investor perspective, the markets are tight. You've got great strike selection. I see a lot of covered call trading in something like this because you do get a decent premium. Implied vol is probably 15-20% higher than S&P 500. But it's also steady too. And there are a lot of long-term holders of this. So I think this is a pretty popular overlay stock for investors these days.
Yeah. I mean, like Dillon said, we've been trading Apple for a while I've been trading on and off with the trend spread bot in particular. If we look at the analysis right now for the week, we're at a buy. For the month, we are also at a buy. One more sell signal for the month. Mark, you mentioned it. Apple is just so huge now. And I don't know what percentage of the S&P it is currently, but it has almost a $4 trillion market cap. I remember when Apple hit $1 trillion, which was a couple of years ago at this point. And I remember thinking to myself, like, man, how are they going to keep growing? How are they going to keep increasing the value of their company? And they're doing it. And all of these $1 trillion companies are doing it. It's incredible to watch and see. But at the same time, if you look at like their actual financials and look at what their net income is or top line revenue is, there's just so much future growth baked into the stock price currently, baked into that market cap that for me at least, it makes it hard to justify putting a majority of my cash into an investment like this. But at the same time, that thought process has been proven wrong over and over and over by these huge companies.
Yeah.
Can you do a compare to like the S&P 500? Because for a while it was lagging in the last like year or two, but I think it's picked up quite a bit.
You want me to do a side by side?
Yeah, can you?
Yeah,
let's see what you can do here.
Not going to be able to do it on Tradier, but hold on. Let me.
While you're doing that, this is just based on, I'm not sure, this is slickcharts.com, S&P 500 weighted. Apple is still number one at 7.31%, right above NVIDIA. Again, this might not be 100% accurate, but so yes, still number one weighted stock in S&P. I was curious to know what it looked like on the trend spread watch list. Ben's got a comparison here, so let's take a look.
Yeah, so on the right side, we have Apple. On the left side, we have the SPX. So ignoring all the lines that I've got on it, you can kind of see the price action here. I'm going to click on 1 year for each of them. And it looks like, yeah, there was a bit of divergence in March. So that's like this time frame here on SPX, and then over here this time frame on Apple. So there was a divergence, but then since then it looks like Apple's pretty closely followed the overall market.
Yeah,
agreed. This fall it's really picked up. I mean, that huge surge from November, what we go from like 215 all the way up to 245 here.
Yeah, got all the way up to 260.
Yeah, wow. And like, trend spread's a great name to trade on this because it's a big, equity. It's obviously 7% of the S&P 500. Doesn't get much bigger than that, but it still moves a bit, right? Like that implied vol, I'm seeing like the 30-day number at like 25. So that's fully 10 clicks above what the SPX is. So if you're trading it on trend spread, you're going to collect decent premium. There is going to be a little bit more trendiness, quote unquote, to it than, an index, of course. So I think this is a great trend spread name.
I love this play, actually, looking at it on the watch list right now. So bullish, moderate. Okay, so good start, right? It's trading, and this will be updated when the market updates again here when we open. So this is based off of Friday's data, but EV almost at 1. I would imagine that this is typically higher, as we can kind of see that stock's been falling a little bit. Maybe that's taking a hit, but really nice pop here. Probability of profit almost 80%. Very good ROI at 9.4. Buffer's almost at that green zone we look for at 3%, but that's a lot of breathing room to still be wrong. Only a $5 spread. I love seeing a $5 spread on a $240 stock, pretty, you'd think it'd be wider. $47 in premium. So you're earning 47, putting 500 out there for the trade. And right now it would be looking to stay above 237.5. Again, this data will update this morning, but yeah, very popular trend spread play for sure.
And I will say, I like trading trend spreads, calls, and put spreads. I would be dubious about putting on condors with this. I have struggled with condors in Apple specifically. And I'd say that actually extends to equities in general. I'm much more an index fan with the condors, but Apple in particular, it's tough for condors.
I would agree with that feeling of equities are probably, less, I'm less likely to trade condors on equities too, because you could get news like we saw Uber last week, right? We were on a clear downtrend. Goldman comes out and says, hey, this is our top pick of the year. All of a sudden, price shoots back up. If you were trading condors on that, it wasn't even anything that the company did or said. It was something that a third party said about the company that made the stock price go wild. So there's just too many factors out there to try and consider when you're trying to determine like what range are we going to stay within. Now, granted, if you were still bullish, which I was for PeakBot picks, I lost anyways. But that said, anything could happen at any time for one individual company, whereas something happening for an individual company impacting an overall index will be much less of an impact overall.
Yeah.
Very much agreed. I do have one additional comment on the trading of Apple. I think earlier I said it's got great liquidity. It's always up there at top of volume. Spreads are decent. What I do wish they had was dollar strikes, because as you pointed out in that trend spread, like you're at the 237.5. So for whatever reason, the options listing plan or whatever, we've decided that we're 2.5 strikes in Apple. Could really use dollars in here, especially now that it's like, I mean, I guess it makes less of a difference as a $250 stock, but dollar strikes would be nice here.
I completely agree. And I was also just looking at TradingView here to see their last earnings report, big miss back in October of last year. I wasn't aware of that. I was going to look at the analyst ratings and kind of like the future forecast here. So right now, this is for the next year. It looks like they can see kind of both ways. Maybe it's right, pretty close to the average, maybe just a couple points up. We have, based on 53 analyst ratings, we got 23 strong buy, 12 buy, 15 hold, and only 3 total sells. But yeah, I mean, I wouldn't trade it on wheel. It's just too expensive for my portfolio. It's certainly on our wheel watch list. I'm sure bigger accounts do trade this, right? Because again, same mentality of trade stocks that you want to, you're comfortable owning and you feel bullish about in the long term. I'm certainly bullish about Apple. I think it's hard to be bearish about it in, long term. Just feels like an untouchable stock. But let me ask you guys this, compared to some of these other stocks out there that are so crazy priced, Tesla, Netflix, Costco. I know they're not doing the same thing, but even NVIDIA. Do we think Apple's going to really climb up to there? Do we think we'll see them at this $500, $600 price per share at any point? Mark, what are your thoughts on that?
I kind of agree with Ben, right? Like if you look at some of the financials, like I don't know, I don't see the story personally of where 100% gain in stock could come from. I struggle to see where these current ones are coming from. Yeah. And I'm definitely not a fundamental analyst, but this doesn't seem, it's too mature. It's a $3.5 trillion company to have that kind of growth. But what do I know? I just know options.
Well, the crazy thing is, like, Mark, I totally agree with you. But at the same time, I just pulled up a 5-year chart here. If we look back in June of, okay, maybe that's not fair because that was coming out of COVID. And prices were crazy. But let's go to
but it's doubled in the last 4 years.
I mean, in June of 2020, accounting for splits, because I think there was a split sometime in here, maybe not. It was trading at $80. Now it's at $240. So that's 3 times what it was trading at, 5 years ago, 4.5 years ago. So although it's a huge company, it's still finding ways to double itself within a matter of years.
And not that much with acquisitions is my understanding, right? Like I think they're always sitting on a pretty big pile of cash, but they're never out, like it's all homegrown kind of innovation.
Yeah, that's how I understand it. Yeah, they do sit on a lot of cash. I remember, I don't know how many years ago it was at this point, but when there was a bunch of talk about Greece going into Greece having a huge amount of debt and how Apple could consider buying Greece. And I don't know if you remember that, Mark, but they could the plan was to make it like Apple land and no taxes and all that good stuff. But I don't think that was ever a serious conversation.
But if anybody was going to do it, it just shows how much, cash they're spitting off, right? All these devices that everyone's a fanboy of, they bring in a lot of revenue. And you know what? From a marketing standpoint, I don't know. I mean, they're at the point where they don't even need to market, right? They don't need to do anything. But these launches that they have, I don't know if you guys see this the way I do. And I'm curious to know if we were to go and line up their launch dates of the newest iPhone or the newest iOS or whatever new product it is, how the stock does, because it goes viral every
single time. I'm not just talking about people talk about it. It's on the news. It's covering your social media feed. People in the stands at the thing or, watching them announce the new thing. It's insane.
And the funny thing is the consensus is always like, oh, it's only marginally better than the last iPhone.
Yeah, but the last iPhone was so good or good enough that if it ain't broke, don't fix it. I kind of feel like Apple is like the Madden football game. It's how much better can it get? Okay, are we going to improve the graphics a little bit each time? Are we going to have these new features? But if it ain't broke, don't fix it. Apple, even down to the logo. What an unbelievable logo, guys. Never changed it outside of the color, right? And when it first launched, it was the fully colorful Apple. And then just went black and white. I don't think it's changed since. Anyway, do we have any other thoughts on Apple?
I wish they made the small iPhones still.
I'm
I'm stuck on, I think, like a 14 or whatever, and I don't want to upgrade because every new phone is like the size of an 8.5 by 11 sheet of paper. They're ridiculous.
Yeah. They are getting outrageous, and I don't have, I like to jokingly say, like, I have like Burger King hands, BK hands. I don't have huge hands. I don't know how anybody's navigating on the iPhone Plus, like with their thumb over to the, to the Q or whatever.
It's a two-hand device.
Yeah, which, come on, that's not necessary. But
I want to go the other way. I want like Nokia 8810 size.
Give me an Envy. Give me an Envy Flip, and I'm good. Last thing I noticed on Apple, and this has nothing to do with the stock, but it has something to do with the iPhone. The number of cameras on the back of your phone throughout the day has, adjusted, right? We had the one. Then when they had the two lenses, and you didn't even know if they were both cameras or if something else was going on too. 3 was the most I've ever seen, I think, just these last few phones. The newest iPhone that they're marketing now, back to 2. We only have 2 things on the phone. So I don't get that. I don't know. We're taking a step back.
And if you look at like Samsung phones, they have there's 6 cameras on the back of them. It's crazy.
Well, and they arguably, I think, for the longest time had the worst camera, jokingly terrible cameras and Snapchat and footage. But now I think Apple, that's probably the only department the iPhone's getting beat in is the camera. I think on the other side is on Androids are outrageous at this point. Okay. Awesome.
All right. Let's keep this train moving here. Good conversation on Apple. I think the overall consensus is not a bad candidate for trend spread. Of course, perform your own due diligence and determine if it's the right fit for you.
Absolutely.
So let's move on. Last week, we learned a little bit about what implied volatility is. This week, we're going to stay along the same thread of implied volatility, but instead of talking about what it is and how it impacts price and, how sentiment impacts IV, we're going to talk more about what are some strategies that we can actually implement in different types of volatility scenarios. So Mark, I'll kick it off to you to get this conversation going.
For sure. So yeah, like we see here, we're going to talk about how to use implied volatility for some strategy selection. And, the implied volatility, kind of to recap what we talked about last week, is the options market's forecast of how much the stock is going to move and what those options are going to be worth based on that prediction of future movement. So generally, when you're setting up option strategies, you want to find names that the market is pricing it to move more than you think it actually will, or less than you think it actually will. Or if you think the IV is going to have some directional bent to it too, right? So you're not just selling implied or buying implied volatility when you're trading options. You also have somewhat of a direction here too. So as we can see, we look at high volatility strategies, low volatility strategies, but then neutral strategies. And neutral also has to include some element of direction to it also. If you believe IV is completely fairly priced, then there's probably not a trade. But generally, to kind of parse a strategy and determine whether it's high or low IV, you kind of need some kind of benchmark of saying what is going to make this implied volatility cheap or expensive. No matter how many years you've been out there trading, it's hard to just look at a straddle and say sold or buy them. It's you usually want some kind of yardstick to measure what is high or low volatility. pretty good indicator would be to use the historical volatility. If implied volatility is higher than what it's been doing historically, that's a good indicator, or the options are pricing that volatility is going to be higher than what it's done recently. It's a good indicator that maybe implied vol is expensive. Conversely, if it's cheaper than historical, might be a good time to buy. Another interesting tool to use would be an IV rank. So rather than just consider how implieds are pricing relative to what it's done recently, you might want to say, where has implied volatility been recently? So IV rank is probably the most common place that we see that. And that typically is done on a 52-week basis. We say, what is the implied volatility today versus where implied volatility for 30-day options have been over the last year. And so that typically comes through as a percentile. Often people will try and find high percentile names as, potential credit trade opportunities, and low implied vol percentiles as, buying opportunities. One of the truisms, no matter what your benchmark is, that I tend to find as, an individual retail trader, is that when implied volatility is high, often it isn't high enough. And when implied volatility is low, it's not necessarily always low enough. So while, it feels natural to say, hey, something's at the top of an IV percentile, that's not an automatic sell signal. And the same as it's not an automatic buy signal just because it's cheap. And the market tends to have a little bit of a memory, a little bit of a, bias one way. So if you do see high volatility, I wouldn't necessarily treat that as an immediate sell signal to go out. Time to start asking some questions. Often high volatility opportunities are good places to buy, because the market isn't quite expecting as much. So it's important, no matter what benchmark you use, to have some kind of research, fundamental, yardstick to determine whether vol is high or low. High. Sorry, go ahead.
No, I was going to say it's a good take on it, and the information on screen here actually is coming from GPT with a little bit of analysis from myself. So I wanted to ask, based on what GPT says and the logic that I think this makes sense when we're looking at a high implied volatility environment. You did say don't go out and sell right away, but start asking some questions. I totally agree with that, because when IV is higher, typically prices are higher. And when we're option sellers, we want to take advantage of that higher premium.
Exactly. And if you determine that volatility is high, that's the right time to enter into a credit strategy. So whether they're credit put spreads, call spreads, a little bit of directional element there. Straddles, I definitely would not recommend for individual traders. Turn that into a condor of some kind of structure. But generally trying to get short with either a bullish or bearish or, neutral bias. So if you really don't know where you think stock's going to go, but you think vol is definitely high, that's when you'd kind of go with that condor. But as we said before, I think it's difficult on individual equities. So I would err towards some of those call and put credit spreads if you think it's high. If you think vol is low, again, keep in mind that directional thing and flip to the other side of the trade. Long debit spreads. I tend to like strangles a little bit more than straddles here. I'm less concerned about buying, naked options than I am selling naked options. So to the extent that you do see some cheap teenies, teenies being those low delta, low dollar cost out of the money options. If you do think vol is low, going for some of those wings is kind of where you see the most convexity. So I would say when I tend to be buying further away from the money. Whereas when I tend to be selling, when I see higher implied volatility, I'm going a little bit closer to the money.
Awesome.
Cool.
For this, I figured, and Ben, obviously you guys seem to agree here, this is worth 2 sessions. There's a lot of information around IV for traders to get a good understanding of when it comes to finding successful plays that work for their risk tolerance. I'm sure as we go, we're going to have a way that we work IV. It is baked into our watch list, but maybe more moving it more toward the front of the watch list with a data point. Ben, have we discussed that in the past?
Yeah, we've discussed adding that. And we we do factor IV in when we have different risk levels. that I think is probably the best way we can go about doing this.
Right.
Yeah, that's sort of actually was where I was going to go, is that implied vol is like kind of hard to wrap your head around. And, we talked last week about how you can convert that annualized number into like an average daily move, which often gives people a much better kind of gut check of, what's going to happen or what to expect. So IV is the driver of all these options prices. So knowing what's going on under the hood is important. But at the end of the day, I think, especially for some shorter term trades, what IV converts to in terms of risk reward and pricing of spreads is kind of the easier, more intuitive, trade structuring path. That you might say that, hey, this credit spread, is paying me 50 cents on a dollar wide spread. That's a lot more intuitive than saying vol's 16% and I expect it to be 14.2%. That's a little, harder to wrap your head around, that compared to 50 cents on a dollar, boom, that's my risk reward.
Right.
Mm-hmm. So question, and then let's move on to the next segment here because we're getting close to market open. Given the strategies that PeakBot has, and let's just go with let's start with Iron Condor, and then let's talk about trend spread, not so much wheel, but starting with Iron Condor, Mark, what would you say is the best environment to trade Iron Condors? High IV, low IV, neutral or moderate IV? What are you thinking?
Kind of with my commentary earlier, that I actually think low IV tends to be some of the best times for the Iron Condor strategy. Generally, I think it's a strategy that we want to keep on across most environments, that it's really hard to, make decisions day over day about being on or off. But as far as like big macro backdrops, that low IV, even if you're selling something slightly cheaper, when vol is low, it's often not low enough. And so, calm, steady periods of relatively low movement, low IV, that actually, ironically, is where I tend to see the Condor thrive.
Awesome. What about trend spread?
Trend, I think you like a little bit more implied volatility in your soup, that being able to collect a little bit more premium on those credit call or credit put spreads, I think adds quite a bit of juice to it. And there is a directional component to it too. So to the extent that you have a fundamental directional bias, some kind of momentum or mean reversion bias even maybe, and combine that with high volatility, you can sort of get two edges working in your favor there for trend. So I actually think when we're looking at credit strategies on the trend side, that I like the higher implied vol numbers.
Makes sense. Awesome. Cool. Well, if anybody has any further questions about IV, feel free to shoot us a message. Feel free to shoot Mark a message as well. If you go to peakbot.com/harvested, you can also get more information on the services that Mark is providing to his clients via PeakBot's bots. Dillon, want to give a quick overview here?
Sure. Yeah. Well, and Mark, feel free to jump in. But as you can see on screen here, this is peakbot.com/harvested. This is where we partner up, where PeakBot provides the automated software for Mark and his team at Harvested Financial to introduce automation into their trading and investing process. So now what we're able to do is, for accounts as low as $10,000, offer a professionally managed portfolio with Mark, being that he is a licensed RIA, a registered investment advisor. And what he's doing is it's completely hands off. You don't have to pick stocks. You don't have to pick strategies. You don't have to know when to trade them. You hand your cash off to Mark and let the professionals handle the trading and the automation for you. So there's some FAQs here. Of course, a sliding scale for pricing. Keep in mind, we're doing this for accounts as low as $10,000. So it's a huge gap that we're filling there to get a professional to manage your investment portfolio. Not to mention automation with risk-defined option selling strategies and an options trader that knows what he's doing. Yeah. And Mark, if you have anything to add here, please do. I think we got to talk more about this on our shows as well. Not to just pitch, but there's a lot of value here. Mark, what else you got to say?
Yeah, I mean, really, I get to let the bots do all the trading and execution. And what I focus on as an advisor is really portfolio construction, allocations, ticker selections, and sort of building a custom portfolio. I have a bunch of different model portfolios and work with individuals to make even more bespoke options or portfolios, I should say. And using these bots to stay exposed to the opportunities in credit strategies. Whether they're across iron condors or trend spreads or wheel bots. We sort of build an allocation that's anchored by high quality wheel type names and then push out the risk spectrum with some of the trend opportunities and some of the iron condor opportunities. And in addition to that sort of allocation and portfolio construction, the changes throughout the week. We also focus on managing some of those corner cases with options, because no matter what the bots are going to do, there's always expirations and assignments and closing early opportunities. I work very closely with these fellows to kind of do some analysis when those closing opportunities should be, whether it's a take profit or whether it's a stop loss. So beyond just letting the bots handle most of the execution, I do sort of put some manual spin on the ball to, really improve the performance of these portfolios. But couldn't do it without the bots.
Awesome.
Love it.
Cool.
We absolutely love this partnership. It's up and running, off to a great start. And, the market has proven challenging and tricky for all, but, we, as Mark mentioned, keep a very close eye on our strategies here and any updates that might need to be made to meet new market conditions. I think we need an entire show revolved around iron condor and our experience with it over the last few months, the highs and the lows, and how we plan on moving forward with it. And if we're keeping calm and condoring on, or if there are times when maybe we should be taking the seat, whatever. So awesome. Very helpful. Yeah. If you're interested, get on the wait list. So go to peakbot.com/harvested, get on the wait list. Again, accounts as low as $10,000 can be fully managed for you with these automated option strategies. So
awesome.
Economic events quickly? Or?
Yeah, let's
Okay.
flip through economic events and then let's wrap, because the market's opening here in about 17 minutes. So I will pull up the TradingView economic calendar. I'm just going to flip through. You guys feel free to chime in if anything strikes your fancy here. So we're looking at today, January 6th. We have some S&P global data that's getting released within the next 30 minutes or so. Scrolling down, some auctions later today, nothing too notable. The only thing that I think is notable is pre-market. The last time I checked, the market was up like 0.75%. Don't know where it's at currently since we went live on the show here. If we look ahead to tomorrow, we've got some PMI data, job openings data, a 10-year note auction. So for those of you that trade Max's 0DTE bot, the bot will be off tomorrow because the 10-year note auction is one of those days where we turn that bot off. So no trades for Max tomorrow. It will be trading today. Moving into Wednesday, just some lesser important data, I'll call it. Looks like in the morning, getting into the afternoon, we've got a 30-year bond auction and FOMC minutes. Both of those are also grounds to turn Max's 0DT bot off. So his bot will also be off on Wednesday. It's also grounds to turn the Cashflow AI bot off. That bot will be off for most of the week this week, actually. And then on Thursday, the market is closed. So another shortened week. The market is closed. It is a national day of mourning due to the passing of President Carter. And markets will remain closed that day. It does look like there are some events still happening that day. It looks like some Fed speeches later on in the afternoon. And then moving into Friday, non-farm payrolls and unemployment rate are some, I'll call it a lot bigger, more important data points that come out pre-market. Moving into market hours, not too much going on there other than the Michigan consumer sentiment. Looks like preliminary report, which is marked as high importance per TradingView. I don't really let that particular event impact my trading.
You're not worried about
It'll be an
that?
interesting day Friday, right? Like after the holiday, who's thinking about turning that into a long weekend? Like is that could either move or not move those announcements, right?
Yeah.
So it's definitely going to create an interesting pocket of trading on Friday.
That's for sure. Yeah. And I've not been a fan of these pockets of trading over the past 2 weeks.
No.
We need a full week. Is next week a full week?
I think we have 1 full week before MLK.
I was going to say, when is MLK Day? Because that's another shortened
That's
week.
like the 19th, I think.
Yeah. Okay. Well, we'll get out of this. We'll get out of this little,
20th.
Whatever we want to call it. So fantastic. I guess the only thing we didn't do was a little SPY analysis, but we've talked about it enough and we took a look at it earlier in the show. So let's wrap here, fellas. Again, Jorge, happy trading to you. Thank you for tuning in. And thank you to the over 810 viewers who tuned in to our show here today. That's fantastic. If you're interested in getting more involved in the world of trading, investing, specifically in the world of options trading and selling options and how to automate it or how to let a professional handle that for you, visit our link tree. Go to linktree.com/use PeakBot for a full list of PeakBot's partnerships and products, including our partnership with Mark and Harvested Financial. So we really appreciate everybody tuning in today. We will be live twice on Friday. So we'll be live 11:55 a.m. Eastern with myself, Ben, and Thomas for the automation station and some live PeakBot picks and updated portfolios. And then we go live at the end of the day Friday as well, around 4 o'clock at market close to just review how we did for that week. So I think that's it, guys. Really appreciate everyone. And we'll be back same time, same place next week for this show, Man and Machine. Jorge, we appreciate you. We'll be back Monday morning, 8:30 a.m. Eastern. Thank you. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.